Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so here we are looking at the NEO daily chart, ticker symbol NIO, did close today on March 20th at a price of $4.71, being down about 8.9% on the day, but going up about 1% so far in the after hours. And so, yeah, I wanted to follow up on NEO because tomorrow is a pretty big day. The 21st NEO reports their earnings prior to market open. So I suspect that we'll be seeing some volatile moves either to the upside or the downside. And so I just wanted to give my perspective on that. There were a few things that gave me some confidence the past week or so that I did want to go over, but then of course seeing this gap down today, I am a little bit concerned that we could be going around $4.50, and so I'll break down why I think we could be heading to that level. And I also did want to follow up on the drawings at the levels that I had marked up on the chart here from last video. But before I do that, I did want to just mention the moving averages that are here. And so most notably, we got that 200-day moving average, which is at a price of $4.71.1. That is the blue line there. And so we effectively did close exactly at that level, not considering that fraction of a penny there. So we did pull back to that level that could be acting as support. Was some resistance over here when we got one close above it, but we quickly pulled back below it. Did act as support over here, so will be very interesting to see if it does act as support tomorrow after their earnings report comes out. And then a few other things, the two other levels that are up here. One is the 21-day moving average, that pink line there. That is at a price of $4.65, right around there. And then we have the 50-day moving average in yellow, which is at a price of right around $4.42. So, I'm hoping that 471, the 200-day moving average in blue, does hold as support, but I am prepared for the possibility of price coming down even lower. And, I unfortunately suspect that is the more likely scenario, but I did want to kind of break down my thought process in the stock price over the past week. But before I do that, I am just going to throw up a horizontal line here as I add up those drawings, just coming back to the close from March 10th. That was at a price of $4.46. And what you might notice from that is a gap to the downside that has not yet been filled, does also correspond with that 50-day moving average. So, I'm wondering if we do pull down to that level, fill that gap, find the 50-day as support before going higher. But then I also want to talk about some of these other levels. One of them does stand out to me, has stood out to me as being some notable support. This light blue horizontal line here at $4.69, being right around the closing price from today. That was the high hit on February 21st. Let's see. Yeah, 469. Did, like I said, get two closes above that. And actually, this close was above that break above that level, but we did get rejected before pulling back. And that was effectively, a breakout from this. If we take a step back, a breakout from this downtrending light blue line that has served as resistance going back to, let's see, October 28th, when we hit a high on the day of $6.03. Also got the other pivot point here being the high from December 9th at $5.36. So that's how you get that downtrending level there. Got kind of a kiss or a tease of that level, but did get rejected from it over here on the 6th of January. Did just barely touch it on February 4th. And then, of course, we did break out from it. Got a little bit of a retest here, then launching up, and then another retest with the low from March 4th being at a price of $4.10. And so now what we are seeing, so I'm just going to kind of walk you through my thought process aside from, right around 450 acting as support, which when I did make the last video, I believe that's when I drew this doodle arrow up here. I talked about the possibility or, how I thought that the stock price would be pulling down to around 450 before going higher. And so following drawing this doodle up here, we have pulled back to around 450 two times with the low from March 13th being $4.65, piercing the 200-day moving average as well as that light blue horizontal line there at 469. And then today, the low was 470, so getting just below that 200-day moving average, but not getting below that horizontal light blue line. And so what we see here, I'm just going to try to interpret the volume and see, if that suggests to me that this is going higher or lower. And so what we see, or what we saw on March 11th, we saw this nice big green candle going up over 17% on the day. And with that move, corresponding with that move, we saw a pretty big increase in volume. And that's been the highest volume that we've seen since, let's see, going back to September 30th when we hit this high up here. That was a high at a price of $7.71. So a pretty big move there. It's the last time we saw volume that high, I believe. Actually, yep, because the volume on the 1st of October was 147 million shares traded, whereas over here we saw 162 million for this candle. So a pretty big spike in volume there did suggest that buyers were behind this move, suggested a lot of strength. But then the following day, we got this wick up to 549. I was hoping that we'd see it get to 550. And I remember actually watching the minute candles on that day. I have some calls and I was thinking, well, if it's going to hit 550, it's just going to keep going. Did not get there, still holding the calls. Unfortunately, I could have, lowered some risk on that day, but, it is what it is. And so with that, we saw a move higher, the candle, the wick, the trading for that day going higher. But what we saw in the volume was a decrease in volume that did suggest some weakness that we might be pulling back. And so that is what we did see on the 13th, 7.25% down on the day. But then we started to get a nice bounce. And so this is where my volume analysis is probably a little wishy-washy. From over here, from the 4th, we went up to that high there. So just taking this big range here, we went up almost 34%. So pretty nice big spike in volume there. And then we start to cool off. And as we cool off, volume diminishes down, but we start to form higher lows. This is not diminishing down and then just falling off a cliff. It got caught here with this, 7.25% down move on the 13th, and then it started to bounce. We got a bigger increase in the volume on the 18th, which would have been, let's see, was that Tuesday of this week? Yes, I believe so. So an increase in volume with getting to, basically the same highs over here. On the 11th, the high was 533. The high on the 18th was also 533, kind of putting in a little bit of a double top there, I guess, with this volume being an increase from this drawdown in volume, but it being lower volume than what we saw at those prior highs. So this does suggest some weakness that we're looking at a double top there. Although the following day, lower volume, and we were holding up above those levels. So that was making me think, giving me a little bit of confidence, but really just comparing the volume on those 2 days that we hit the high of 533. That's a decrease in volume. So that does suggest some weakness. But like I said, we were holding above these levels. I do have this yellow line marked here at $5.13. That was giving me some confidence. And just to note, that was the high from February 27th. $5.13. But then, of course, we gap down today. And so I am feeling a little bit shaky about this into earnings. I think it might be going down. But there are some other things that we can draw up here. I did have this marked in white before, but I changed it to green because I think this is kind of like the ultimate bottom that we would be seeing. This is the 786 from this Fibonacci retracement over here, going from the low from February 11th up to that high from February 27th. And so this 786 retracement is at $4.26.5. Very interesting. We did see a break below that level, getting a couple days, 3 days really, trading below that level, but that being a bottom, putting in higher lows. So I think that, was a pretty good look. But now, what could we be doing? Are we going to be pulling back to fill this gap around 450, or maybe getting caught by the 21 or 50-day moving average? Let's actually do another Fibonacci retracement to get kind of an idea of that. And so I'm just going to do this retracement from the low that was hit on March 4th, then going up to the high from March 12th. And so that was at a price of $5.49, with the low from the 4th being at 410. So I'm just going to make sure those levels are marked correctly. So they're looking good there. I'm just going to make the line, let's see, yellow. So it stands out a little bit for us, better than the white, hopefully. And so I just have the two levels up here, one being the 786, the other being the 618. And so I am hoping, fingers crossed, that this is able to hold above, that NEO is able to hold above the 618, which is at a price of $4.63.1. And so what I mean by hold above, that means that maybe we get a wick below that level tomorrow, but if we get a close above it, that would be great. I would really like that a lot. And so not only is there the 618 there at 463.1, we also have that 21-day moving average currently at 464.8. And then also, that light blue line going across and just above these levels, that 200-day moving average at 471.1. So I'm hoping that that holds, especially, potentially leaving this gap behind. I think that would look really, really good, show a lot of strength. We'd forget about that gap. But if we do start to go lower, which unfortunately I think is probably the more likely scenario, that 786 is at $4.39.7. We also have the 50-day moving average, the yellow line there, that is at $4.42.3. And then, of course, that gap there at 446. And so another reason why I think that this could be coming down to these levels following earnings and also closing on Friday around 450. You might be able to guess it, but that is because of Max Pain, which, I'll go over some of the options data here in a second. But if I just flip over to the Max Pain, we can see that for tomorrow, for March 21st, Max Pain is $4.50. It's also $4.50 for March 28th as well as April 11th. But in between there on April 4th, it looks like it's $5 a share. And so what would be excellent, what would be phenomenal, is if we get a big move to the upside following earnings or corresponding with earnings, and we get a close tomorrow on Friday, the 21st, well above $4.50, because then I think that could trigger a gamma squeeze. And then with the following Fridays, Max Pain being the same strike or the same price, $4.50, I think that, that will likely get pushed up higher, maybe to 5, maybe to 550. But we would then get a bigger move to the upside in the early part of next week, but then that Max Pain could kind of suppress it. But that is, with the hope, not the likeliness, not too likely in my opinion. But if we do get, with that hope, a close well above 450, ideally above 5, then we could really start to see some moves to the upside. But because Max Pain is 450, I think that market makers are going to want to drive this to around $4.50. And so that would be right around here. So do look for that. But with that being said, maybe there is a little bit of hopium over here. I'm just going to draw trend line, very casual, just going from the low that we hit on the 13th of January, and that was at $4 and let's see, 1 cent. I'm just going to have a pivot point there, just kind of see what's going on with this. And so we did get one close below that level here, did get a wick to that level on the 3rd of March. But that will be suggesting that we might be revisiting this green 786 retracement around 426, 427. But, maybe I'm being a little conservative with that, and maybe I could adjust this to be over here like this. Adjust that trend line up. So we have no closes below it following effectively this double bottom. And actually the low that we saw on the 11th of February was 403, so 2 cents above the high here. So, I'm just going to be basing it on that. And if I were to, draw another line over here, that would still be, a higher low. But from this low, approximate pivot point, and actually maybe I want to do this not so approximately, I'm going to use a ray to connect this to the low there and then connect it to the open here from the 4th of March. And so I'm just going to make sure those levels are correct. So the open on the 4th was 418. So let's see, 418 mark there and 403. I had just mentioned that was the low over here. So that looks good. I'm going to lock that in place, and I'm just going to make that a little bit thicker. And so based on where we're currently at, yeah, I mean, that trend line does correspond with, these levels over here, maybe, into early next week. But if we do go lower, right around 450, 440 maybe, I doubt we'll be getting back to 426.5, that green 786 there. But this yellow 786, I'm going to make a little bit thicker there. 440, I think that seems likely, but maybe we just get to 450 or maybe a wick to 446, but not to that 786. That would be filling this gap, and then maybe find some support before we start to rally. Oh, and then one other thing. Sorry, I'm just kind of rambling all over the place here with the chart. Let's see, and I actually might... I'll leave those up there, but I might just make them a little bit thinner so they're not too in our face. But, I do have this purple downtrend here. I tend to like to make necklines for head and shoulders patterns purple. Not really sure why, I just like the color. But so what we can see here is that I'll doodle it out and then I'll adjust it, or I'll delete my doodle in a second. But so basically what I was thinking here is based on effectively the highs from October 30th, we had, the beginning of an inverse left shoulder over here, followed by an inverse head here. And then on, let's see, what date was this? I'll have to come back and look. We did start to form a right shoulder. And then now, maybe we're forming a little bit of a bull flag. Maybe that's just some hopium. But yeah, let's see here on the high from February 27th, that was maybe getting to like that armpit of that right shoulder there. So the left shoulder, head, right shoulder over here. And now maybe, we're putting in the handle of this cup. Possibly that is what is going on. And if that were to be the case, we can take a measurement going from the low of the head there up to that neckline. That would be suggesting that wherever we break from, let's just say it's, the midpoint here, approximately that's where we're going to break out from. And then that could be bringing price to around 650, let's say. But something I was thinking about before I started making this video was maybe this neckline is not coming to the pivot point here as that being the armpit, but maybe it's to the pivot point here from the high from March 12th. So what we can do is, just, let's see, adjust this pivot point to be over here. And then I'm going to drag this to intersect with the pivot point over here. So now what we have formed is still, the left shoulder, the left inverse shoulder over here, but rather than the head going up to this pivot point here at 513, being at that armpit, it's actually over here. And so maybe this pullback that we're seeing is going to effectively follow this doodle that I have here to put in the right inverse shoulder. So maybe we are still looking at a bigger picture macro bullish pattern here, although maybe not. If it was to be the other inverse head and shoulders pattern that I was talking about, and we were getting a rejection here, a fake out break above, and then this rejection, that would be a failure of a bullish pattern. And so, from what I hear, there is nothing more bearish than a failed bullish pattern. So it's quite possible that's what we're looking at, but it's also quite possible that we're looking at an inverse head and shoulders pattern like this, with the head over here coming up to here, and then that doodle serving as that right inverse shoulder. And so if that were to be the case, that boosts this neckline up a little bit more. And so I am just going to take the exact same measurement that I took before, going from the lows there straight up with that midpoint, marking where that neckline is. And then if I do extend that over, that could be giving us an idea of where this could be going, not to 650, but maybe to 680, or maybe corresponding with this 786 up here around $6.92. Over here where the cursor is, this retracement coming down, that would be, getting back up to right around $7 a share. So yeah, I think that there's a lot of potential with the chart. Longer term, maybe a bigger picture perspective, that this is looking good, that we might be getting above that neckline still, that we are, we formed this cup here, effectively forming the handle now. But maybe, even if we come down to 440, that would still, be putting in this inverse head and shoulders. And then also something I do want to mention with this, something I've been learning following Colin Gladman. If you don't, Colin _Gladman on X, or also, his YouTube channel. He doesn't talk about NIO ever really, but just his breakdown of the chart. Something that I learned from him recently was that what you want to see in a head and shoulders pattern, whether inverse or normal, is that when you see these moves, you want to see increase in volume. And so, we saw that there, but then over here, we want to see a greater increase in volume. And that's what we've seen. So the increase in volume over here from this left inverse armpit, the volume was 123 million shares traded. But then over here, when we saw this possible, armpit for the right inverse shoulder, that was 134.8 million. So an increase in volume. So that's good. But if that, in fact, is not the armpit, we're actually seeing that having been formed on the 12th. So really effectively the day before that, we saw a volume of 162 million shares traded. So as we are forming this inverse head and shoulders pattern, we are seeing volume progressively increase. And so that is suggesting that buyers are, pushing this higher. And I think that we will eventually be breaking out to the upside, but it may be following a pullback to around 440, and then maybe in the weeks, into perhaps getting into April, then we start to see big moves to the upside. And then since I did kind of skip over it, I did just want to go over the net flow from NIO. And so this is just from today. So from March 20th, what we can see is the increase in put premium in red there, whereas we saw an initial increase in call premium in green, but then over the course of the day that did fade lower. And so we actually saw net call premium decrease by about $100,000 over the course of the day, whereas net put premium increased by about $625,000. So overall, that does suggest that this is probably more bearish. However, we do see that there's a lot of selling here. And so, yeah, I mean, actually, that could just be corresponding with the call premium decreasing. So do consider that this is overall the premium here suggesting that it's a little bit bearish getting into earnings. And then if we also look at the top chains here by volume for today, we can see that the number one contract traded was the $5 call that expires this coming Friday on the 21st, so tomorrow. And so volume traded today was about 35,000 contracts, considering that there's an open interest of around 85.6 thousand contracts that are open at the start of today's trading on the 20th. If we see a decrease of about 35, that would leave still 50,000 contracts still open. So, there's still, going to be some held. Even if all 35 of these are closed, there'd still be 50,000 contracts open into 0 days to expiration. And with that being said, just because there are 50,000 contracts open doesn't mean that they're not going to zero. But trading contracts, trading options around earnings, very risky. So do consider that. And also, I should note that the net volume change from Wednesday into today, Thursday, as I record this, got a decrease in volume by about 2,000 contracts. So really not that much considering the 85,000 that were currently open at the start of the day today, but that might be decreasing to around 50. So do consider that. And then the next highest one, last one I'm going to go over here, is the $5 call that does expire on April 17th. And so that has about 67,000 contracts open at the start of the day today, but about 35,000 contracts traded, might be selling, but it's not 0 days to expiration, so there is some wiggle room with that. But from Wednesday into Thursday, it does look like we saw a more than 24,000 contract decrease. So this was up around, let's say, 90,000 contracts open at the start of the day on Wednesday, but then opening on Thursday today, that went from about 90,000 contracts open to around 67,000. So that does suggest, that those bulls are not as confident as they were before. So that does suggest that it is looking a little bit bearish. So yeah, I mean, I feel like if you guys are still watching the video at this point, and if you've seen my videos on NIO, you know that I have a bias. I want this to be going higher, but I kind of accept the reality that this might be going down to around 440 tomorrow, closing around 450, and I'm fine with that. I'm going to be chilling. But I do think that we might be finding some support there, and that might be the next dip buying opportunity, as we have been seeing higher lows. 440 might be the next higher low before we start to break out. And, I think that we could be seeing $8 a share later this year, if not, in the next couple months. So that's what I'm hoping for. That's what I'm looking for. And also, I should note, I forgot to do it at the beginning of the video, but I will be doing a live pre-market prep tomorrow. So starting around 8 a.m. Eastern, I'll be going over kind of the usual tickers that I do, but then I'll also be covering NIO. So if you want some live coverage of NIO in the morning, make sure you tune into that. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching, and good luck trading earnings. I hope it's a good one for us. Take care, you guys.